And welcome to the class of business studies. Today we will start with chapter 10, that is financial market. Now in financial market, as the name suggests, last time we did financial management also. These are the institution. When we talk about market, it is a kind of place or an institution arrangement which is made by which savings generated in the economy and channelized into avenues or chances of investment by industries, business firms and the government. That means here industries, business, that is firms and government are participating with the purpose of generating savings in the economy and channelizing all these chances of investment. It is a market for the creation and exchange of financial asset. That means this particular kind of financial market, it is a kind of market where we create financial asset or we exchange these financial assets. That is three people or three sectors are there, that is households who are called savers, banks and financial markets, and business firms, that is investors. Now the functions of financial market, the first function, as I said, that this particular financial market is a channel or is a source or a place where we can mobilize our exchange or mobilize our savings and investment. So the first function of financial market is mobilization of savings and channelizing them into the most productive use. That means how we can make movement or how we can use this savings and channelize them for the most productive use. First, it facilitates transfers of saving from the savers to the investors. That means it is actually transferring this savings from those people who save, that is household, to investors, that is business and firms. Financial market helps poor people to invest their savings. That means it also helps the people, that is household, to make their savings possible in various financial instruments and earns income and capital appreciation. Facilitates mobilization of savings of people. Then it also facilitates or give a result to mobilization of savings which can be possible of people and their channelization for the most productive use. Now here productive use can be for investment purpose. Then second, facilitates price discovery. Because of financial market, price of anything, that means price of any product which depends upon two forces of market, that is demand as well as supply. So demand and supply of financial assets and securities in financial market help in deciding the prices of various financial securities, where business firms represent the demand and the household represent the supply. Now third is provide liquidity to financial asset. It also, that this is also one of the function, that it provides financial assets or provide liquidity to financial asset. Liquidity means when there is a flow to financial assets. Financial market provide liquidity to financial instruments by providing a ready-made market for the sale and purchase of these all financial assets or securities. Whenever the investors want, they can invest their savings into long-term investment. Here investors are the firms or businessmen who whenever they need, whenever they require, they can invest their savings into long term investment, that is in business, and whenever they want, they can sell the investments or instruments and convert them into cash. That means either they can use this investment or use this saving for the purpose of investment, or they can convert this into cash. Fourth, reduces the cost of transactions. That means it also provide valuable information to buyers as well as sellers of securities or financial assets. It also helps to save time, efforts and money that would have been spent by them to find each other. That means they are also actually helping these savers and investors to save time, their efforts and their money, so that it is easy for them, it is made possible for them to buyers and sellers by providing valuable information through this financial market about price strategies. Also investors can buy or sell. That means all these people who are investors, they can easily buy and sell securities with the help of financial market through brokers who charge a nominal. That means there are certain brokers in this financial market who are actually helping out all those people who are engaged in buying and selling of financial assets, and they charge a very nominal or minimum commission for their services. This way financial market facilitates transaction. That means with this way they are facilitating the financial transactions at a very low cost. Now types of financial market, we have two kinds of financial market, that is capital market, this is for long term requirement, money market for short term requirement. In long term requirement or capital market, we have primary market and secondary market. These primary and secondary market, participants are bank, investors, mutual fund, LIC and others, and this is all controlled by SEBI. Now this is money market, in which we have these instruments: treasury bill, commercial paper, call money, certificate of deposits, commercial bill, and here participants are RBI, commercial bank, investors, LIC and others. Now we will do this one by one. First, starting with money market. Money market or market for financial securities with maturity period of less than 1 year. Market for low risk, that means this kind of money market is a market for low risk, where there is less risk, and unsecured and short term debt instruments that are highly liquidity and are related or are released every day or traded every day. No physical location but conducted over the telephone, that means this is done online, no physical interaction is there in money market. All the things are done online through internet. Helps to raise short term funds, that means the purpose of money market is helping to raise short term funds. Then the main instruments of money market are as follows. First, treasury bill. They are issued by, these treasury bill are basically issued by RBI on behalf of the central bank government to meet its short term requirement. As I said, money market is actually fulfilling the short term requirement. So this treasury bills is also issued by RBI on behalf of central government to meet its short term requirement of funds, and they are issued at a price which is lower than their face value and are repaid at par. They are also known as zero coupon bonds, that means this treasury bill is also called as zero coupon bonds because they are negotiable. These are negotiable instruments, that is they are freely transferable from one person to or from one holder to another. Second is commercial paper. It is a short term, again it is also a short term kind of unsecured promissory note issued by large credit worthy companies, that is this is issued by basically all those companies who are doing their work at large scale and having better credit to raise short term funds at a lower rates of interest than market rates. That means it is just helping these large scale companies to raise their funds through by providing lower rates of interest than market rates. They are negotiable. These instruments are also negotiable, that means they can be transferred from one person to another by endorsement and delivery with a fixed maturity period of 15 days to 1 year. Third is call money. It is short term finance, again it is also short term finance, repayable on demand with a maturity period of 1 day to 15 days only, used for interbank. Again this kind of call money which is used as interbank transaction, that is from one bank to another bank. Call money is a method by which bank borrows from each other, that is from each other banks, to be able to maintain the cash reserve ratio which is maintained by RBI. That means in order to maintain the cash reserves, these particular banks are doing such kind of negotiation. The interest rate paid on call money loan is known as the call rate. Fourth is certificate of deposit. It is an unsecured instrument, that means this instrument is not secure, it is unsecured, issued in bearer form by commercial banks and other such financial institutions. They can be issued to individuals, that means commercial bank or other financial institutions are issuing this, and it can be issued to individuals, corporations and companies for raising money for a short term period ranging from 91 days to 1 year. Fifth is commercial bill. It is a bill of exchange basically, used to finance the working capital requirement of various business firms, that is just to fulfill the working capital requirement, that is day to day needs of business firms. This particular bill of exchange is used or issued. A seller of the goods draws the bill on the buyer when goods are sold on credit basis, and when this bill is accepted by the buyer, it becomes marketable instrument and it is called as trade bill, and these bill can be discounted with a bank if the seller needs funds before the bill matures. Second kind of market after fulfilling money market, second kind of market is capital market. It is a market for medium as well as long term funds, just like money market which was there for short term funds, whereas capital market which is used or issued for medium and long term funds. It facilitates an institutional, again the arrangements are done from institution through which long term securities are raised and invested both in debt as well as equity. Now features of this capital market institutions are, it provide long term funds as well as medium term funds, lesser outlay required as per unit value of instrument is very low. That means the value or interest rate of this instrument is very low. Duration is less than 1 year. Liquidity, that means it is high, having high liquidity, lower safety, higher expected return as compared to short term securities, because it is it is used for a long term period. The capital market can be divided into two types, that is primary market and secondary market. Now if we talk about primary capital market, it is the market in which a security is sold for the first time. As the name suggests, primary means which is done for the first time. The securities are bought or sold here. It is also known as new issue market, and it transfers investable funds from savers to entrepreneurs, that is from savers to investors. The funds are used for setting up new projects. That means this kind of funds which are raised through primary market can be used for raising, for expansion of the business, diversification, modernization or upgradation of new projects or existing projects, mergers and takeovers, etc. That is for this particular purpose primary market is used. Then methods of flotation of new issues in primary market. Initial public offer, the first term which is used in primary market, it is initial public offer. If a company wants to issue capital to the public through the online system, the system is online, through the online system of the stock exchange, has to enter in an agreement with a stock exchange, and this is called an initial public offer. That is, in primary market, initially whenever the funds are raised, the offer is called as initial public offer. Offer through prospectus, or they can raise the funds, that is can offer this through prospectus. This involves inviting subscription from the public through issue of prospectus, and a prospectus is basically documents which is having all the details about the firm or company, inviting deposits from the public for the subscription of any shares or debentures of the company. Third they can do is offer for sale. The securities are not issued directly to the public but are offered to the public for sale through some stock brokers. That means there are certain mediators who charge certain amount of commission. So with the help of these brokers they can offer it for sale, or private placement they can do so. Under this method securities are allotted to various institutions, investors and some selected individuals who are there to process for purchase and sale of the securities. Right issue, then this is a special facility given to existing, that means to the old shareholders or existing shareholders, to subscribe to a new issue of shares according to the terms and conditions of the company. Now what is the difference between primary and secondary market? In terms of securities, if we say, that is if this basis of difference is there, in terms of securities, in primary market only new securities are purchased or sold, whereas in secondary market only existing securities are traded. Price of securities, in primary market the price of securities are determined by management of the company, whereas in secondary market it depends upon the market forces, that is of demand and supply. Then purchase and sale of securities. Securities are sold to investors directly by the company or through some intermediator, that is through brokers. In secondary market investors exchange ownership of securities, that is it is negotiable. Whereas place of market, there is no fixed geographical location for primary market, but for secondary market it is located at a specified or particular places. Medium, only buying of securities takes place, but here in a secondary market both buying and securities takes place in the market. Now difference between capital market and money market. Here if we see participants in capital market, financial institutions, bank, corporate entities, foreign investors and individuals participate in capital market, which is for long term funds, whereas in money market we have RBI, bank institutions and various other finance companies. Basis instruments traded. In capital market the instruments which are used for purchase and sale of securities, it is equity shares, bond, preference shareholders, debentures and call money, whereas in money market it is treasury bill, trade bills and other commercial papers. Investment outlay, if we see, it does not, that is capital market does not require a huge financial outlay, whereas in money market it requires a huge sum of money for the outlay or for the instruments because it is quite expensive. Duration, the primary capital market deals in medium and long term securities, having a maturity period of 1 year, whereas in money market it deals in short term funds having a maturity period up to 1 year or less than 1 year. Then liquidity, securities in capital market are less liquid as money market securities, whereas in money market instruments are highly liquid. Then expected time, it is giving high return, that is if we see capital market it is providing high return, whereas money market which is providing a very low return. Now what is secondary market? As we discussed the difference between both, the stock exchange is known as actually secondary market for a securities. In this market existing securities can be traded, that means all those existing securities including shares and debentures can be traded. It refers to a market where existing securities are bought and sold. The company is not involved in the transaction at all and it is between two investors. That means what is secondary market? It is actually stock exchange market only where two investors are there. Features of secondary market are it creates liquidity, fixed locations, comes after primary market and encourages new investment. Now what is stock exchange or what is called as share market, which we are referring to as secondary market. So a stock exchange is an institution which provides a platform for buying and selling of existing securities and also facilitates the exchange of these securities, that is shares, debenture, etc. into money and vice versa. Now what is the functions of this financial market? The first function, as I said, that it actually facilitates the purchase and sale of securities. So the first function of financial market, it is mobilization of savings and channelizing them into the most productive uses. So it facilitates transfer of saving from savers to the investors. It also helps people to invest their savings into various financial instruments and earn income and capital appreciation. That means it belongs to various investors. It also facilitates or mobilize, that it is helping in movement of savings of people and their channelization into the most productive use. Facilitates price discovery. Price of anything depends upon the demand and supply factors. So demand and supply of financial assets and securities in financial market help in deciding the prices of various financial instruments or securities. Provide liquidity to various financial assets. Financial market also provide liquidity to various financial instruments by providing ready market for sale and purchase of financial assets. And whenever the investors want, they can invest their savings. That means whenever the investor want to invest their savings, they can invest, or either they can convert them into cash. Fourth is reduces the cost of transaction. That is what is the expenses of transaction which can be reduced through this. That is by providing valuable information to all buyers and sellers related to the prices of various shares and debentures. They can actually reduce the expenses of transactions. Then also investors can buy or sell securities through the brokers, that is mediators, who charge a minimum commission to them. Now what are the trading procedure on a stock exchange? The first process or procedure is selection of broker. That means the first thing which needs to be done in stock exchanges, in order to trade on a stock exchange, first a broker must be selected, should be a member of stock exchange market only, as they can only trade on the stock exchange. Second can be the placing of an order, that is through broker only they can place the order. After selecting the broker, the investors specify the type and number of securities which they want to buy or either sell. Third, executing the order. That means now finally after placing the order must be executed properly. The broker will buy or sell the securities as per the instructions which is provided by the investor. Fourth can be settlement, that is after executing the order, transactions on a stock exchange may be carried on. Transaction means the process of buying or selling can be carried on either on cash basis or carryover basis, that is credit basis. The time period for which the transactions are carried forward is referred to as accounts, which vary from a fortnight to a month. All transactions made during this particular time period or during this one account are to be settled by payments for purchases and sale of this share certificates, which is a proof of ownership of securities by an individual or by an investors or shareholder. Then dematerialization, many times we have heard this word, that is which is related to Demat account. Earlier trading on a stock exchange took place through a public outlet, that means before time or earlier this kind of trading of stock exchange which takes place through public outlay or auction system, which is now replaced by an online screen based electronic trading system, that is through online system. Moreover, to eliminate the problems of theft, forgery, transfer, delays and an electronic book entry is used from a holding and transferring securities, which has been introduced, which is called as process of dematerialization of securities. Now, what is the benefit, why we have used or going with this dematerialization, or we can call it Demat account? The first benefit or advantage is it reduces paperwork, eliminate of the problems which is there on transfer of shares such as loss, theft, forgery or delay, exemption of stamp duty when transfer of shares are done. So, we can exempt our these kind of things. Increase liquidity, that is flow, it will increase through speedy settlement, that means all whatever placing of order and all such things can be done properly. Attract foreign investors and promoting foreign investment also through Demat account, and a single Demat account can hold investment in both equity as well as debt instrument. This is also one of the benefit. Now, how to open or what is the working of this Demat account? A Demat account is opened on the same line as that of a bank account. That means just like the working of a bank account, when we need to open an account, the same way we need to open a Demat account. Prescribed account opening forms available with the DP, that is depository participants, need to be filled in. That means the person who wanted to deposit or who wanted to have an account, he is depository participant, which that form which he need to be filled up. Standard agreement is to be signed by the client and the depository participant, in which there is details of rights, duties and obligation of both the parties, that is the client as well as the depository participant. Along with this form, the client is also required to attach a photograph, attested copies of residence, that is his full address, proof of his identity need to be submitted along with it. Then depository services, just like a bank keeps money in safe custody for customers, a depository here is bank, that means all these services are provided through bank only. So, a depository also is like a bank who keeps securities, example shares, debentures, bonds, mutual funds etc. with the investor only in electronic form, because everything is done on online only on behalf of the investor. Now, investor here is the client. In the depository, a securities account can be opened. All shares can be deposited here and they can be withdrawn or sold at any time. That means either they can purchase or either they can sell this at any time, and instructions to deliver or receive shares on behalf of the investors can be provided or can be given to the depository participant. Now, the services which are provided by this depository are, now dematerialization, which can be called as Demat account, also is converting physical certificate, that is in the form of shares, to electronic form. Rematerialization, that is another term is there, rematerialization, which is known as remat account, which is just reverse of Demat, that is getting physical certificates from the electronic securities. Constituents or elements of this depository system are, the depository system consists of the depository participants, that means there are two people, either the depository and the depository participant. The depository is an institution which holds the shares of an investor in electronic form. There are two depository institutions in India, these are NSDL and CDSL. The depository participant, he opens the accounts of investors and maintains the security record, he is depository participant. Now, what is the work of SEBI or Security Exchange Board of India? So, it was established by Government of India on 12th April 1988 as an interim administrative body to promote orderly and healthy growth of security market and for protection of the investors. It was given a statutory status on 30th of January 1992 through an ordinance, that is through a rule which was replaced by an act of parliament known as the SEBI Act. 1992. So, it seeks to protect the interest of all the investors who are engaged in purchase and sale of securities in new and second hand securities. Now, what are the objectives of SEBI? First, to regulate or to control stock exchange and the security market to promote their orderly function. Second, to protect the rights and interests of all investors and to guide them properly, to prevent trade malpractices such as internal trading, to regulate and control, develop a code of conduct and fair practices by intermediaries, that is brokers or merchant bankers. Now, functions of SEBI. The first function of SEBI is protective functions. Under protective functions, we have some subtopics. The first is prohibit fraudulent and unfair trade practices in secondary market. Example, price rigging or misleading statement. When we say price rigging means increase in price. Now, second can be prohibit insider trading. That means all such malpractices should be in control through protective functions of SEBI. Then educating the investors or guiding the investors to promote the fair practices and to follow proper code of conduct in security market. Second are development functions, in which it promotes training of intermediaries of the security market. Investors education is done, promotion of fair practices and code of conduct, and conducting research and public information related to the secondary market. Third is regulatory functions, in which registration of brokers and sub-brokers are done and other players in the market. Second is registration of collective investment schemes and mutual funds. And third is regulation of all bankers, that is stock bankers, portfolio exchanges and merchant bankers is done in this regulatory functions. So, this is all about today's video. Thank you students, and we will meet again in the next video. Thank you.